Folks, I believe this stock is screaming buy right now, and I know that's a bold statement, but stay with me, because what I'm about to show you is not theory. It's happening right now. There is a small AI company trading under $2, and in the last few weeks alone, it signed a deal with one of the most recognized technology companies on the planet. Then signed another contract worth up to $50 million. Then partnered with a defense and critical infrastructure firm. 3 major moves in weeks, and most retail investors still haven't noticed. Let's start with the big picture, because this is not just about one company. This is about where the world is going. Right now AI is moving off the cloud and onto the edge. What does that mean? Think about it this way. Right now most AI runs in massive data centers, far away from where decisions actually need to happen. But that's changing fast. The future of AI is local, on the factory floor, at the military checkpoint, inside the autonomous vehicle, at the hospital bedside, real-time, low power, no lag, that is called Edge AI, and it is one of the fastest growing markets in the world right now. Now here's where it gets interesting. Most companies trying to enter this space, they're starting from zero, no partnerships, no clients, no proven technology. This company is different. They already built the chip, a programmable AI processor designed specifically to run AI at the edge, fast, efficient, low power consumption, and now the world's biggest names are plugging into it. Let's talk about Nokia. Yes, that Nokia, one of the largest telecommunications companies on Earth, they just extended their collaboration with this company to roll out hybrid AI infrastructure across Asia Pacific. Nokia's networking gear, combined with this company's AI compute platform, deployed together across one of the fastest growing technology regions in the world. That is not a press release, that is validation. When a company Nokia's size chooses your technology, it means something, and that's not all. Just this week, a brand new contract was signed, worth up to $50 million, to deploy co-branded AI edge data center infrastructure across Asia Pacific. 50 million, new contract, this week, and the stock is still under $2, and then there's the defense angle. Because this company just announced a strategic collaboration focused specifically on sovereign edge AI for defense and critical infrastructure. Think about what that means. Governments, military installations, power grids, communications networks, all running AI at the edge, all needing chips that are fast, efficient, and secure. This company builds exactly that. Now let's talk numbers. Revenue $38.6 million. And here is what separates this from a story stock with nothing behind it. The company has actual cash on hand, low debt, a current ratio above 2, meaning they have more than enough short-term assets to cover short-term obligations. They are not running on fumes, they have runway. And Wall Street is paying attention. One major analyst firm just maintained their buy rating with a price target of $6. The stock is trading under 2, that is more than a 200% gap between where it sits today and where analysts believe it is going. Now I have to be straight with you, because this channel never hides the risk, and there is real risk here. This company is burning cash. It is not yet profitable. Losses are significant, and this stock has already made a sharp run, nearly doubling in recent weeks before pulling back. That means volatility is real. The move has already started. Whether there is more left, nobody knows for certain. This is a high-risk speculative play, not your savings, not money you cannot afford to lose. Do your own research, always. But here's what I keep thinking about. Nokia just validated the technology. A $50 million contract just landed. Defense collaborations are live. A major analyst has a $6 price target, and the stock is still under $2. How long does a gap like that stay open? And now you've waited long enough. The company we've been talking about is Blaze Holdings, ticker BYZI. Trading on the Nasdaq, current price under $2. That's it for a second. Nokia chose them. Defense contractors chose them. A $50 million partner chose them. And yet the market is still pricing this stock like nobody noticed. That is the opportunity, not the hype, the gap between what is happening inside this company and what the stock price currently reflects. Those gaps don't stay open forever. Markets catch up, sometimes slowly, sometimes all at once. So the only question left is this. The contracts are signed, the partnerships are live, the analyst target is $6, the stock is under 2. Will you look at this before the market catches up? Or after? Because in this market, the ones who move early are the ones who win big. I'll let you decide. If this gave you something to think about, hit subscribe. We do this every single day. New stock, new analysis, same mission. See you tomorrow.